So this is our class video 5, July 27th. It's going to be a fairly short lesson. Sorry, trying to get my mouth working properly. Truth is, I've been struggling a little bit with an illness from diving. I got a formal lesson last night on pressure and what it does and how to manage that properly. Anyway, so this is video number 5. Video number 4 went out last night. Video number 3 has not gone out yet. Video number 3 was my reprimand video, and video number 4 covers the information that was in video number 3. At least I don't think anybody sent out 3 yet. The current curriculum we're working with is we're going to cover, so I'm going to review this really quick. We're going to cover the 200 MA setup, which we covered yesterday in video number 4. I'm going to cover the trending breakout recent high or 52-week high setup, which is today's. Then tomorrow I'm going to cover the washout snapback type play, and then on Monday or Tuesday I'm going to cover morning momentums, breakouts, gap and goes, and then on Wednesday of next week I'm going to start algorithmic modeling. The important thing about the algorithmic models is that I use them extensively. And by the way, we have to keep this very casual and fluid, because if we get alerts like this, I have to go and take a look at what's happening. So that is going to happen right now. So the algorithmic modeling is important from the perspective that it is a primary alert that I use. And just so you know, intraday right now, oil is getting right up to an important resistance. So I have to teach how the basic modeling works, because, for example, on Monday, and I've been asked to beat this drum in each one of our videos for the next number of days, so that the message gets across to everybody, so people aren't wondering what's going on here, because you're going to see a shift. Starting Monday, Monday or Tuesday, I start trading for our private fund. We're already trading for it, it's just I'm not trading for it. I start trading for it on Monday. It's basically my retirement last wave goodbye trading session that's scheduled to last for 24 months, and the goal, we're shooting for the stars, maybe land on the moon, at minimum land on the clouds. And what we mean by that is the goal is 100% a month for 24 months compounded, and it's a fairly significant pool, so it's a nice way to go out. And that's a private investment pool of various investors. The reality is that, you know, at minimum I expect 25% a month. Any trading challenge I've ever done, I've hit 25% a month. So I would assume that I'll hit 25% a month compound. If I hit 100, great. If I hit 50, you know, great too. 100 would be exceptional. 50 would be fantastic, and 25 would be pretty much what's expected of me. So where I'm going there is that in the notice that I have to put out and keep repeating until I start trading Monday or Tuesday with the fund, is that you will see my trades get much more high frequency. Why is that important for our traders? That's important because if you're, you know, and I always tell people, learn from my alerts, but don't follow my alerts. And the reason why you want to learn from my alerts instead of following my alerts is because it's hard to follow somebody in and out of trades. Well, when I get high frequency, and I'm not talking mechanical, digital high frequency. I'm talking, you know, like bot high frequency. I'm not talking that route, but I am talking about high frequency as a human trader, trading much more frequent. Not easy to follow me in and out of stuff, and I won't be able to alert everything, right? So it's a different place, and it's also a different place from my conduct in the room and what I've got to do in terms of charting and how I chart. And that leads me back to what I was saying about the algorithmic modeling and how it's good for you to understand the basics of that, because I use it for my main indicator for in and out of these trades, especially when I get into the more serious trading environment. So I basically start trading full time, is what I'm saying, Monday or Tuesday under a pretty serious environment and protocol. So that's coming next week. So getting back to our curriculum. Yesterday was the 200 MA. Today is the breakout, recent highs, 52-week highs. Tomorrow was washout snapback, one of my favorites. And washout snapback, by the way, to do 100% a month, you have to trade those, and you have to get good at those. The 200 MA, might get you 25% a month. The 52-week highs might get you 25 to 50% a month. The washout snapbacks is what you need, and you also need those momentums in the morning to get 100%. You need those plays, so that's our curriculum. And then after the morning momentums on Tuesday, then on Wednesday it's into algorithmic modeling, and then we're going to come back around and get into other trade setups and break them apart more. Right now I'm just doing the basics because I had some newer traders, and we have some newer members coming in even today and yesterday, that when people are new, that's when they're typically in trouble. 9 out of 10, 8 out of 10 come to us. Well, at least 9 out of 10 actually come to us, and they're in the red and they're struggling. So I'm doing these basic setups right now in the basic first few videos in the curriculum here to make sure that they get the basics so that they can stop the bleeding and trade, with some discipline. And by the way, that requires people to watch the videos. I don't want to be like Mr. Crazy techie, we're watching everybody kind of guy, but we have it's something called analytics, so we know, when people are on our website, what pages they're on, how long they're there, what they're reading, the videos they watch, and all that kind of stuff, right? Because I get reports on that. So, Sartaj serves all that up and says, Kurt, this is what our members are doing. They're watching this or they're not watching that. They like this, they don't like that. The public hates you because of this, and you need to, dye your hair and wear a wig because you're bald. So that type of thing, right? So getting back to the curriculum, it's important that people watch the videos, especially the traders that are losing, and the ones that are earliest in, most recently in our fold, so to speak, as members, are the ones that are losing, and they happen to be the ones that are not watching the videos or not, being disciplined about what they're doing. So I hope that encourages people to, do what they're supposed to. And one other quick thing, I just, on my Twitter, so, I got to keep beating these drums, right? So here, one of the better midday chart trade setup reviews today in the last few weeks, bunch of rape setups, blah blah blah, and then I explain, and this is, for people that have heard it, it's getting old, but because I've said it so many times, but they don't do you any good if you don't get the skills, right? So you need the skills and you need the setups. You need both. It'd be like saying I'm going to go race the Indy 500, having the best car, but have never raced it before. You're going to hit the wall pretty hard, even though you have the best car, the best setup, right? Yeah. So those are my pleas. As far as actually getting down to it here. So by the way, I'm in a trade that I was kind of concerned about because it was acting funky in here. I entered it right at the top of this candle, I think, 1380, yeah. And then it came off on me, and my MACD was getting funky on me. And I set a stop and said, well, I'm going to get into the room. And then I re-hit it here somewhere. And so now it's kind of doing its thing. We're going to use this one as an example because I wouldn't mind keeping an eye on it too. I've got a stop set in it anyway, but so my average cost is probably $13.70, I guess, or so. By the way, when I alert those buys, like those are my buy orders, right? Like my actual fills might be a few cents off those. I don't know, because I check my fills later. I don't trade on 2 or 3 cents. So I think I've dealt with all kind of the cleanup stuff. Pardon me. We're also going to use Amazon in this class. So we're going to use Amazon and LPSN. Now that's a bad candle, that last candle on the intraday. Darn it. Really? Just had to give me that candle, eh? Bugger. Whatever. You got to go with your trade setup. Okay, so BCOR, yeah, it did flag. Oh, and oil is right at a very critical resistance. BCOR. So let's look at it real quick. Sure gets jiggy over the 200. It is over the 200 and it has the 50 MA crossing the 200. Very important. One other quick thing, I did get one other rabbit trail here. While going back to cleanup stuff, I did get a few questions in the room this morning, and then I kind of challenged a few people on whether or not they watched videos and stuff. So that'll happen more and more. Like as you ask me questions, and if it's stuff that we've covered, and I know we've covered it, I'll kind of point you toward that kind of thing. In classes, stuff gets dealt with more. So, and at end today, if you have questions, why don't we just make sure I'm set up here in the day traders room. You can always verbally ask me questions at the end here. I'll open it up for discussion, or you can, just say it in the room text-wise. Or you can zap me as JD has got organized. Okay, BCOR. It sure is nice, but you always have to remember in trading, always defer back to what I call the Sesame Street principle. So you go back to what happened last time and look at and see if things get divergent and if things are like not, what doesn't look like the other. And you'll find the majority of trading is that way. And that's the truth. So, it's really sad when I look through social media and stuff and people are like, I'm going long here. And then I look at it and I go, okay, the last 14,242 times, it looks just like it did when it failed, right? The last 6 million times. And you're going to go against that again, right? Okay, great. I'm glad that you're going to be crying over my DM at 2:30 in the morning. That's fantastic. I love that. And now I'm at fault because something I said somewhere. Okay, there's my rant for the day. I got it out. I'm getting better. My next meeting with stakeholders, like the one last night, I hope to have a better grade. Okay, AMZN. AMZN is Amazon, one of my favorite stocks in the whole world. They are one of the chosen few. You can buy anywhere in this and hold it and be guaranteed that you will see exorbitant stake in the future of the 0.01% paradise that's coming to our Earth. And oh yeah, I'm not supposed to talk like that either. It scares people. Literally, I had somebody, and this is a rabbit trail, I literally had somebody, and this is and you can ask Sartaj, right, for the details. I'm not going to give you the details. This lady, literally DMing me, you're scaring me, like crying in tears, you're scaring me, because, about the future. I will tell you, I don't have very many skills, but I have a couple, and they're pretty good. And one of them is the future. Anyway, you're scaring me. And tried to entrap me once. And yeah, I won't go too far on that. But, and it's like, wow, where did that come from? Crazy people. AMZN. So one of my favorites, definitely the chosen few, no doubt about it. Did you know that they're going to have spaceships over your cookie cutter houses that'll last, at least 12 years, those houses they're building nowadays. And little spaceship out of those big spaceships and deliver stuff to your house. It's pretty cool. Let's get into it. So this is a obvious trending breakout stock, right? Now, the thing about trends, this is what the what do you call those guys? The guys that run services like ours, that swing trading services, they love these, right? The trending ones, because they don't have to be too smart. And we're lazy, right? And so, how hard is it to run a service that says, okay, when it pulls back to one of these 4 colors and it bounces again, then I send out an alert that says buy. Okay, that's how simple as it gets, right? So that's the basic premise. Now the problem with that is what your return per year going to be, your ROI, your return on investment. So you got to think through that. Now, if you buy when it's extended like this and it's not at an MA and it's not bouncing back off an MA, what's your possible return? Well, you're at very high risk. If you want to day trade that, fine. If you want to swing trade that, you're missing out. You're missing the program. So if you're going to swing trade this, you want to wait till it tests an MA and then bounces back up off the MA, gets the mojo going on the other direction, right? This is a weekly chart, by the way. A stock like this, you got to bring out on the weekly and you got to trade it on the weekly. You can trade it on the daily, but really, really tough. So in terms of, it's just a bit tight, right? Now you can, and you're going to see me trade these starting next week on all time frames, because I start on the weekly and bring them down, and then I day trade them, right? And then hopefully I get into swings I can size in. But the point is that they're trending stocks, so you shouldn't screw these up. Like if you lose in these plays, you're simply not paying attention at all to life at all in any way, shape, or form. You are deficit of any logic or semblance of function. I'll just tell you that right now, because it's so simple, right? I mean, this is like I've tested kids. I'll ask kids, like I do this all the time. I'll be like randomly on the beach or I'll be wherever, and I'll show somebody. I'll say, look at that chart and tell me, is it going up or down? Okay, where would you buy? It's really simple, right? Because everybody will say, oh, it's going up. Okay, now you want to buy. Where would you buy? Tell me where to buy. And everybody gets the right answer, and they don't even trade. Sorry, my job's to drill it in. So, because I get these questions all the time on DM, if I showed you guys them, and I'm not going to, but I get the questions all the time. I'm in trouble. Well, why are you in trouble? You bought right there and you held it as a swing. Now on a day trade, we can bring the time down, right? Down to the 5 minute. So on the day trade, 5 minute is a good one to work with. And now if I'm day trading this, I'm looking for the MACD to turn up. I'm looking for the stock RSI preferably near the bottom, which is really tough to have a MACD turning up and stock RSI at the bottom. That's overbought, oversold, right? So stock RSI is the last thing you look at, but your MACD is incredibly important. Also your squeeze momentum indicator, not whether or not it's red or green, whether or not it's trending. So deep red starting to trend up is ideal. MACD deep and starting to curl up is ideal. The stock RSI preferably at the bottom. Near impossible, but you get the point. So it's a good buy zone. Then what I do is I look at my MAs and I say to myself, well, what's my risk reward? So here, not very long ago, at 1:40 p.m., that was the time to buy, right? So what do I mean by that? Well, it had come off heavy. It's lost all its MAs, and I'm talking about not on a swing. I'm talking about on a day trade, right? So the squeeze momentum starting to come up. The MACD just crossed 145, just crossed, and my stock RSI is trending up. It would have been mid-range. You hit it right there, which is not what I did on this. This is a different way to do it, and this is why I'm in trouble. But we'll talk about that right away. That's high risk reward. This is much easier to do. So on a day trade, that's all you do. You bring it down to your 5. You look at these 3 indicators, these 2 specifically, MACD, squeeze momentum, and then look at 2. Volume's kind of important, and then look at your MAs. Once it gets one of the MAs, then you're into the groove, because now you can see if it holds the 20, and or if it gets through the, it's going to bounce between, and then all you do is you hit it in between your MAs. So you'll start to see me do this next week, and your time frame will depend on how, it goes back to Sesame Street, right? So you'll see me study all the way through the time frame and see, on a day trade, does it respond to the 15, or is it responding to the 5, or is it responding to the 30? And you'll see me bring my model in through all of them. It's very tedious. It's very boring work. There's no Lamborghinis or rolling around with money in my bathtub. But what it does do is it provides a predictable environment where you're going to win 90 to 99% of the time. And it's going to be small chomps, right? It's going to be chomp, 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 because you need, about 3% a day compound to get to 100% a month. And that's a guess, right? 20 trading days at 3% a day compounded. If you figure that out, use the compound calculator for that, it's about 100% a month. So I need about 3% a day. To get 3% a day, and I get a 0.5% or a percent, on the average trade, I'm going to see, and it depends on what I'm trading. I'm going to have to be trading 3 to 10 trades a day. That's pretty high frequency in comparison to my trading right now, right? I apologize. My bulldog is telling me the way things are going to go here, and so we're just going to try and ignore him. But I can't let that go too long, because he'll make me pay the price. 13.55, so my stop's almost out here. So, and that candle I knew as soon as I seen that flipping candle. That's the worst candle you can see, by the way. You see that candle when you're in a day trade, bail right away. The only reason I didn't bail is because I have a room, right? Like I can make up, a small loss like this quick. But bail, like that's a bad candle. And then, re-enter if it doesn't come off. And that's what I should, if I was being extremely disciplined about what I just did here, I would have bailed. Like you've seen, as soon as I looked at it, I was like, okay, that candle sucks. That's a bad candle. So just memorize that, right? You can call it all kinds of things. I call it I call it a grave hammer. It's basically a gravestone, but of sorts. You get people calling stuff all kinds of stuff. It's just a bad candle. Memorize it. Okay, so now I want to day trade Amazon. That's how I do it. So I'm looking for my MACD to turn up on my 5, preferably. Go back in, into the trading history and see if it responds to the 5-minute and its MAs and the different indicators. So here's another example. What I would do is, once it gets up in between here and it catches the 20, if it fails the 20, I would have exited right there too. So I wouldn't have made much on this one, or I might have exited at the 200. Depends how tight I'm trading. Now I've got a jet airplane right over top of my house. So I got the dog and I got a jet airplane over top of my house, and wow, we haven't gone dark yet. I'm not having electrical, and I'm not being zapped by JD. So, things are good. I'm still alive. So we're going to keep pushing through here. So basically, that's how it works. What I did here, so this is that same scenario where it's like a breakout stock. It was really extended on the day, and I was like, should I do this? And I, where did I start trading? Right in around here somewhere. The MACD had just turned up, and that's where I got caught, right? I knew my stock RSI was high, but my volume came in, and I was like, oh, okay, my volume's here, right? That's PT, PTRR, so price. So my price is doing the right thing. It's going the right direction. Trigger, my trigger is, it's a high. It's a poor trigger. It's one of the least, it's a high of day. It's breaking high of day. It's one of the least predictable triggers out there. Like that 200, regaining the 200, much better trigger, right? This is high risk stuff. Like this doesn't come with high probability, but when you do win, your reward's high when you're dealing with breakouts, right? So price, it's going the right direction. Trigger, high of day, over high of day. Price, trigger, power. Here, see the power, volume's coming up, and the velocity had come up in that price, trigger, power. I traded. I know my risk reward on it. My risk reward is about 6 to 1. If it went the right way for me and it got grip, um, instead of that candle, because that was the decider, right? 2 legs is your decider. Your first leg after your power is not your decider. It's the second leg. Once you get up into the second leg and it proves out that second leg, now you can breathe fresh air. First leg after power, you're not going to breathe fresh air. So these are all things that you guys are going to learn when I start trading tight. But the idea is to show people that are trading these breakouts. It might be a 52-week breakout. It might be a daily breakout. It might, whatever the breakout is. When you're trading them, you need price in the right direction, and over the high of day, you need the price in the right direction. Your triggers, it's over high of day or over its high of whatever. Its power is here, and so I did that right. And trade, and my risk reward, I already know my risk reward, 6 to 1. Now, what happened was, where I erred, there's a few errors here. My MACD turned against me. As soon as my MACD turned against me, my stock RSI turned against me, and my squeeze momentum, my squeeze momentum turned bright green right there, and that's where I took the trade. My MACD turned up, my squeeze momentum turned bright green, and I didn't really pay attention to my stock RSI, and I had power. So I had everything that I needed, and then it turned against me. The stock RSI flattened out on me, and it turned dark green, stayed flat. MACD turned down, stock RSI turned down, my volume fell out. As soon as that happened, I should have been out. The second, like right there, boom. If you're building an account and you don't hold those rules, you will lose. See, I can hold through this because I know how to drive the car, right? So a skill set of 1 to 10, my skill set is like a 7, arguably between a 7 to a 7.8, and I'm talking globally, right? So when you're functioning at a trading level of 70 to 78% relative to global competition, you're able to carve up pretty good. So I know I can get that back so easily. But a new trader, that's learning how to be green, that just messes with your mind. The chemical balance in your mind just goes tilt, and you're already on tilt, and you go off into the depths of the abyss of blowing up your account. That's what happens. Now, if you don't follow the rules, like I didn't there, and you're a newer trader and you can't regain your losses easily because your mind isn't trained yet, right? Then what you do is you gotta stop trading. You cannot continue trading. You get out of it and you stop trading. If you're in a trade, you paper trade. And you literally stop trading until you find Zen. And I'm not talking about 2 minutes, and I'm not talking about 2 days. I'm talking about 2 weeks, 2 months. A lot of my students would be like, no, you can't tell me to do that. I'm like, I'm telling you, you have to. You don't have a choice. You have to recondition your mind. Your mind right now is losing, and it will cause you to continue to lose until you can get back into that Zen. So prove to me you're back in that Zen. How do I prove it? Okay, let's do a trade and show me you can execute that trade perfect under all the rules. And if you show me that you're being undisciplined against what you already know to be true, so you're being rebellious against yourself, then I have to tell you, you either have to stop trading or I can't coach you. And that's what I do with my students. And then I put them on paper trading. And then what happens is it conditions your mind properly. And then once your mind's conditioned properly, then right? Now you can, once you get past that cliff, or that great divide that's between a winning trader and a losing trader, once you get into the winning side, then you can bend those rules. Because the winning trader, their mind is conditioned to win. It's different, and they can recover instantly. And the longer you go, the faster you recover. Like the more successful you are at it. Your mind, what happens is your subconscious mind actually convinces your conscious mind either way, to win or to lose. But your subconscious mind needs to know you're a winner, needs to know that you win all the time. It's kind of a godlike attitude, right? So you understand what I'm saying? So what happens is when I'm on social media and I'm saying the things that I'm saying, it can look like to a learning trader or to the average trader, it can look like ego, it can look like all kinds of things that it isn't. What I'm really doing is I'm trying to work on, like, the people that are following me, I'm trying to work on their subconscious and their conscious in different ways. I'm trying to get through the losing mind is what I'm doing. So if you go through my feed and you go, actually, you know what, if I see it from this perspective, I see what he's doing. He's trying to break through. He's doing it in different ways. He's trying different things to break through that 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 subconscious mind that's telling that person to lose. They don't realize that's what's happening. But it's a muscle. It's a conditioning. It's like the stock has memory. Like your muscles have memory. Your subconscious and your conscious communication, whether or not you win or lose in stock trading, is a memory mechanism, and unless you develop it, you will continue to lose. So then what I do is I take a student and I say, okay, now that you've lost and you understand these rules, I paper trade. When you're ready, we'll trade for real. But I'm going to examine it, and you're going to tell me exactly what you did and how you did it, and we talk, and I say, okay, so now you knew that was the rule, and you didn't do this, right? And they go, yes, I didn't do that, and I knew that was the rule. And then I say, that's because you have your subconscious is controlling your conscious. It's telling your conscious to lose. So you're being rebellious against yourself. And as soon as people see that, they go, oh, I see it. And then what happens is the time frame between losing and being able to re-enter the ring, instead of practicing in the gym sparring, right? Real trades in the ring. That time frame gets smaller and smaller. Instead of 2 months, training, now you're down to 2 weeks every time you blow it, and then you're down to 2 days, and then you're down to 2 hours. You see? So that's how this works. So when I start trading next week, it's very dangerous for me to show people what I do and how I do it, because they're not conditioned the same way that I am. So I have to put up the warning flag over and over and over and over and over again. And now that we're talking about breakout stocks and blah, 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 and you're going to start to see this live, I have got to be very disciplined every day about, I won't take much time. I'll take a couple of 2-3 minutes every day and, deal with some pointed issues to make sure, because I know what's going on out there, right? I know this person's, I can tell by what people are saying on social media or wherever. That's part of the reason I want people. That's my benefit. It gives me intelligence when you're sharing your trades. It really helps in the room, social media, or wherever, or just DM them to me. Because the way that you share them tells me whether or not you're winning or losing. I can tell you on social media who's winning or losing by the way that they communicate their trades or communicate anything. It's just, money knows money, winning knows winning, and losing knows losing. 99% of what you see on social media and that's out there in the public is losing. They're all losing. 99% are losing. That's why when the winners out there are publishing stuff, it looks like a godlike mentality. It looks freaky to the losers. It looks freaky to the majority. I'm telling you right now, the ones that are really well, received out there, most of them are losing. Most of them. Because when you're losing, your subconscious doesn't like to hear. It doesn't want, it's like being, overweight and somebody's saying, you have to do this, you have to do that, and look at me, I'm strong, and, that's killing it, physically. And you look at it and go, oh, give me a break. I want to see a Cheesy's commercial. I don't want to see a. That's how it works. That's just how people are. So I went off on that tangent because of this chart, right? Because this is where I blew it. Now, I blew it knowing what my risk rewards are. And I know how to get that back instantly. And I don't emotionally struggle with that, right? So my cost average is 1370. My stop's at 13, I think 50. I can't remember. I think it's 1352 or 53, whatever it is. And 17 cents on 2,000 shares. What is that? That's $340. I can make back $340. I go to the S&P or XIV or whatever, and boom, I can get my $340 back just instantly without even thinking. Because there's trending stocks out there. I mean, I can go to the Amazon chart and get it back instantly, or whatever, charts trending for the day. But that's not where the big returns come from. The big returns come from exercising an edge over stuff that gets you strong ROI, return on your investment. So I went on the rant because of my trade. It was a perfect opportunity to show you, because I knew that candle was bad. I knew that when the MACD turns against me, the squeeze momentum flattened out on me, turned dark green, and the stock RSI came off of my volume and fell through the floor. All those things, I knew I was in trouble. So I'm lucky at this point, but I've got one advantage, and that's the trend, right? It's just like losing when you're trading. The trend is you're losing. It's identically the same principle. That's why trading is Sesame Street. Everything about trading is Sesame Street. What doesn't look like the other and what looks like the other. What's the history of it? What's your history as a trader? Are you winning or losing? If you're losing, you are going to lose in the future. How do you stop that? You've got to change that. And that is not easy to do. It's got to be conditioned. It's got to be trained. There's a way to do it, but you have to do it. Like any other expert, right? Think you're going to go and compete out, and run marathons against the best in the world. Guess what you got to do, right? Same thing. Only this has got, this is incredibly competitive. So you're trading against the best in the world when you start trading. Okay, so getting back to the actual setup and not the psychology of it, but the psychology of it is very important here. So getting back to the actual setup, so, on the daily, there's my daily, yeah. So on the daily, I'm, obviously in breakout mode. And so I got that on my side. It's gapped. I got that on my side. Usually these will, run at least 3 days. There's a 3-day rule you can look up. And I bring it down to the 5-minute. It's still trending on the day. On the 5-minute, my 20 MAs disappeared on here. But it's been respecting the 20 MA. I didn't check my EMAs. There we go. So even the 21 EMAs being respected. So, what I did was my entry was right. My entry was over high of day with the power, with the MACD turned up. My squeeze momentum had turned bright green, even though my indicators are disappearing here. So something's wrong. So you guys might lose me soon. But I didn't take the signal to get out when I should have. But now, I'm okay, but I'm lucky I'm okay so far. Really disciplined. I should be exiting right here too, right? But because I can handle the risk reward, these breakouts, they have a 6-to-1 risk reward if you handle your exit properly. So yeah, anyway, same thing with Amazon. So Amazon, it turned up here. The squeeze momentum turned up here. MACD turned up here. Stock RSI really doesn't matter, although it'd be nice to time it properly. But even where the MACD squeeze momentum turned up, the stock RSI was only mid-range trending up. Price was starting to trend up. It hit the 200 here on the 5, and that's an excellent place to exit. So, that's not a big gain in there. That's, 1,049.07 to 1,058, best scenario, 55. It's not bad, right? It's a bit of a gain. Not a great one. There's better stocks, and that's why you're going to see me get much more serious about our setups too, right? So generally speaking, that's how it works. The other thing too, I guess you can watch is if you do lose your MAs and you get underneath the MAs, under the 20 is one thing, under both the 20 and the 50 is another thing, especially if the 20 is crossed, and you're in deep trouble at this point, right? So, you can exit, because it's the opposite, right? You can exit, anywhere, anywhere in the downdraft, but when you lose that 20 MA, you got to be thinking, right? Like even your stock RSI was signaling right here. right before. What a lot of guys will do though, and women, sorry, what a lot of people will do when they're into a trend scenario is they'll let that come off till the stock RSI gets to the bottom. You'll see me do this, right? You'll be like, why is he letting that come off the way he is? And then I reheat it down here, and then it straightens out for me. This scenario was bad, like anybody that held through it. So, you could have all the way up here, held all the way through the stock RSI and just bought all the way through on the stock RSI at the bottom. That makes sense. So that's basically how breakouts work. There's really not a lot more than that involved in them. Momentum our velocity and volume are huge in breakouts. Velocity and volume. And like even this volume coming down here consistently, that's very critical too. But we're going to do a lot more of these live anyway. So, but for the case, or for the sake of the video, I had to get this on video. So that's 52-week highs or any kind of breakout. The MAs that I'm using are 20, 50, 100, and 200. The EMAs are 8 and 21. You'll see me turn these on a lot more now, the 8 and the 21, for my tight day trading, and I'll explain those more once we start doing it. The indicators I use are the squeeze momentum on the bottom, the MACD here, and my stock RSI. See, so I'm in trouble here. But there's buys come in when it's in trouble, so there's still some bulls betting on it. So we'll see. We'll see what happens here. What else do I need to tell you? That's about it. So the MAs that I use for these setups when you're watching. And if you're going to tight day trade and do any of this with me, preferred that you get TradingView. I know that they're a partner of ours now, and I don't know if Sartaj gets a discount for members now or what's going on. I know they've been in discussions, but up until now they haven't been. But so anyway, what I use is stock RSI, MACD here, squeeze momentum here, 20, 50, 100, 200. This is important, so I just got to make sure people have it. EMA 8, EMA 21, and VWAP. In certain scenarios, I'll end up turning up on the VWAP, and on my charting, orange is VWAP. And then I've got another setup that I'm going to start using for these next week, but this is the primary one that I use. So what I'm going to do is open it up for any questions, and tomorrow we are going to do the washout and snapback, and then on Tuesday the morning momentums, and then Wednesday we're going to get back into algorithm model building. So I do have the room here, so there's only 4 of us in there anyway, but verbally you can ask any questions or you can type any into the room, and if you don't have any, then yeah, I'll get on with my day. Yep, the mind is the key. So don't zap mine, please. Appreciate that. Oh, I'm glad you guys like my rants. Our stakeholders don't. That could have been the market shakedown right there. Yeah, the market's gonna start to, it's getting close to a time cycle end. Hey Reed, how you doing, man? Glad to see you in the room. Oh yeah, the dips, yeah, for sure. Okay, well, I know that what I just explained is all fundamental, but we do have some traders, fundamental and basic, but we do have some traders that are struggling, especially some newer folks, and yeah. So I had to get these done before we go back into the modeling. So I appreciate your guys' patience with that, but yeah. Anyway. Okay, well, it sounds like we're good. So it's 10 to 3. I'm going to go for a dive. Yeah, I don't know, Greg, to be honest with you. I know, you know what, I do know this. I know that being in shape is good for your mind. There's no doubt about it. And lots of the traders, lots of the successful, like the world-class guys I know, they're in very good shape. Like they go and they get off their chair every day, just like I've been doing lately. And I'll be honest with you, right? I'm in my last 2 years, starting Monday, and that's got a lot to do with why I'm training the way I am. You know, I personally, I'd like to, you know, my personal goals, you know, like a lot of people have different, you know, trading goals and stuff. My personal goals right now in trading are, I'd like to kind of, you know, at least put a tiny little mark on history. I've got a really nice investment fund, private fund, you know, a form of a dark pool. And with that, in 24 months, if I hit my objectives, I'll hit the map. It's a pretty serious fund. So, you know, I'm going to treat it with the respect it deserves, and part of that's being in shape. So yeah, you're right. Um, yeah. So just get in shape, man. Get off your ass. I'm joking. I used to run. It was awesome. Running a runner's high is just incredible. I used to marathon, not very often. Like I'd do a quarter or a half a day, and then, but you know, depending on what the runner's high is awesome. Okay, so I won't banter anymore. It's 10 to 3. Tomorrow we're going to get at it. Make sure you watch those videos. That'll be the first thing I do tonight when I get back to work. So I'm going to be back to work around 7 or 8 tonight. I'm going to do a heavy session. I am going to pump this stuff out. The very first thing I'm going to do is get the videos out, which, by the way, I should remember to hit stop. Have a good night, guys.